Hello, everyone, and welcome to Thursday Thoughts, your weekly rundown on all things financial without all the noise and bias of the regular news. I'm Alex, and I'm the Chief Investment Officer at Capital Financial Group. We're putting out new videos every single week, so be sure to subscribe and join me every single Thursday at 4 p.m. for the latest edition of Thursday Thoughts. Also, if you have any questions at all that you'd like me to cover today, you can email those to info@cfgfinancialplanning.com. I hope you have a beverage in hand because tonight we're going to cover a few things that are pretty important. First, we have key data points for the week. We have big news for the week. Then questions from subscribers. And then towards the end here, we're going to have a final thought, and I have a bone to pick with state governors. So stick around for that. I'm also going to touch on a few of these items on CBS 4 News this evening at 6 p.m. So tune in for that as well. Without further ado, let's get into some data points. All right, so big data points on the week. There were quite a few of them. One of the most important ones that was released was the manufacturing data. This is a real good barometer on what's happening in the U.S. market in terms of sales, employment, new orders, good shipments, etc. This index plummeted from 2 in March to negative 53 in April. This is the lowest reading and the largest one month drop on record. All three components of the index, shipments, new orders, and employment, they all fell. And the indexes for shipments and new orders actually hit record lows. This happened in 1 month, mind you. Firms reported weakened local business conditions, and then they actually expected conditions to remain bad for at least the next 6 months. So I thought that was pretty telling that businesses are kind of bearish on their own markets for the next half of a year going into the fall. We'll see how things go if we end up coming up with some kind of vaccine or whatever. But so far, it's been a very challenging environment. Next up, we have consumer confidence. The consumer confidence data is yucky. I mean, it's bad. This green line here is probably the most aggressive decline I've ever seen. I've been doing this for 13 years now, and I've never quite seen something this robust to the downside. Consumer confidence weakened significantly in April. It was driven by a severe deterioration in current conditions. This is all coming from Lynn Franco, the Senior Director of Economic Indicators at the Conference Board. That's the board that does the survey. The 90-point drop in present situation index is the largest on record, and it reflects a sharp contraction in economic activity and a surge in unemployment claims. The long and the short of this is if the number is above 100, that's good. I mean, that means we are rolling. People are feeling good. That happens somewhat near the top of major bull markets. And right now, if you see, we went from over 130, which was near a record high that persisted for about a year, all the way down to the 87-ish range. That is crazy. Haven't seen anything like that in my entire career. Not even during the financial crisis was it quite this fast. Next up on the list, we got GDP this week. This was a big one. This came out yesterday. I realize that this chart is probably a little bit hard to see. I had to resize it for everyone. But what I did is I overlaid some gray graphics to give you an idea of where all the recessions are. You can probably see a trend here. What this chart doesn't definitively show, just because it's so big and it goes back all the way to World War II, is it doesn't show the actual rate of change or how fast GDP is dropping. The print we just saw is we're seeing roughly a 5% drop in GDP quarter over quarter. And what's crazy about that is in all of 2008, GDP peak to trough during that entire debacle with the financial system only dropped a little over 5%. So we've done that in like a month. Pretty incredible stuff. Next up, we have some good data on unemployment. I mean, I shouldn't say good; it's kind of ugly, but that seems to be the trend. This gives us a pretty good handle on what's going on. Everything's slowed down just a little bit as far as new claims in terms of rate of change. This week we had 3.8 million new claims, and we just hit 30.3 million total claims. While this seems absolutely nuts, keep in mind there's a swath of people that haven't even been able to file yet. Those numbers aren't showing up. I mean, the state systems are completely falling apart because of the massive number of people filing every single day right now. So once everything gets caught up, this number should look significantly worse, and we could realistically challenge the Great Depression era of a record 23% unemployment rate. I mean, I don't know if that's actually going to happen. It's just speculation at this point. From my perspective, we got some big news this week. I think everybody's excited that states are reopening. We talked about it a little bit last week, and I'm actually going to delay that conversation just a touch, and we're going to have a little more on that in just a few minutes. We have next big piece, I think, is going to be oil. Talked about that last week as well. Oil prices recovered quite a bit this week, but it's still a total dumpster fire. We have a bunch of oil and we don't have anywhere to put it. We could see the same thing happen with the June futures contracts expiring that we did with the May contracts. And just as a refresher, it just means if you're stuck being the last person holding the contract, you need to find somewhere to store the oil that's about to get delivered to your doorstep. And there ain't nothing you can do about it. Fortunately, U.S. producers have been able to produce quite a bit in the way of production cuts. They're actually cutting production a little bit faster than we first thought might occur. But unfortunately, a lot of that's happening because we're seeing bankruptcies at a pretty alarming rate, especially in the really small frackers that have a higher cost of production. So we're going to keep an eye on that, and we'll probably touch on that over the next few weeks as well. And we have a long way to go before we reach equilibrium on oil again. Before I get to this last data point, I just wanted to remind you, if you guys have any questions, to shoot them in by email. If we can get to them, we definitely will. The last data point I wanted to talk about, big news piece rather, is the FOMC statement. The FOMC statement is basically just a way for the Federal Reserve to get their thoughts out there and to try to be as transparent as possible. They try to let you know exactly what they're going to do in the future so the market doesn't freak out every time Jay Powell speaks. Speaking of Jay Powell, he's the focus of my ire last week. He said things are going to be ugly for the medium term. What the medium term is, nobody really knows. I personally don't have any idea what he means by that, but that is apparently a time frame. He also said that the Federal Reserve is going to keep rates effectively at zero until we achieve full employment. Well, I mean, we have 30 million unemployed right now, so I'm guessing that's going to be a while. He also said that they are going to keep buying treasuries and mortgage-backed securities for an extended period of time. I'm not quite sure how long that's going to be, but apparently that's going to be extended. I think it's kind of funny, though, that he didn't talk about the Fed buying junk bonds, and I'm not going to go down that rabbit hole again this week. If you want to see my thoughts on that, watch the video from last week. It was reposted, and I go into pretty good detail on how I feel about that whole scenario. So now that we've knocked out the news, I want to get to a couple questions. Let's see what we got. All right. We have a pretty good question here. The first question is, oh yeah, this is a really popular question. It's, why is the market doing so well when the economy is doing so poorly? Wow, that is a loaded question. Realistically, I don't have a perfect answer. For that, what I can say is the market has a tendency to overshoot both up and down. When there's major panic selling or buying, people exhaust themselves. At some point in time, there's either way too much complacency, way too much greed in the market, and sometimes there's way too much fear, and we just run out of juice going one direction or the other. In this case, we've seen so many corrections during this bull market that people have a tendency to want to buy the dip, as they say. From our perspective, there wasn't so much of a buying the dip mentality this time, as people just didn't make a lot of changes in their portfolio on the retail side, and a lot of very large institutional investors were trying to deliver a little bit of alpha and aggressively bought when the charts told them to buy. As we don't try to make wholesale shifts by going to cash or going fully loaded on stocks and stuff like that, that's not really the way that we manage portfolios. We just thought that it was interesting watching the chart action move, and frankly, we still suspect that the data is going to drive things, and that we're going to see a pretty meaningful retracement as states start to open and things start to fail a little bit in terms of additional unemployment and more coronavirus cases. All right, let's see what we got for another question here. All right, so the second one's actually a question that I touched on with CBS today. This is a good one. How quickly do you think life will get back to normal now that the states are reopening? That's actually a great segue, because I'm going to talk about that in some of my thoughts here at the end. But it's going to be different everywhere. A huge swath of the population really wasn't affected by coronavirus all that much. I mean, there was a big chunk of farmland in the middle of the United States, and I mean, nobody really went there from out of town. I mean, there wasn't a bunch of big city folks that were infected going to these areas. So I feel like stuff hasn't changed a lot for them. But they also don't really drive revenue and growth. I mean, they're obviously very important in terms of food production and some infrastructure, but by and large, they're not big drivers of growth. I think it's going to be the big epicenters of this, like New York City, for example, where there's going to be a bunch of confusion, a lot of challenges. But I think each person is going to make a decision for themselves and what's best for his or herself and their family. So I wish I could answer that definitively. It just seems like each state is going to be a little bit different. All right, so it's time for the final thought. Last week I called it a rant. We're going to soften that up a little bit. I'm going to say it's time for the last thing, but not the least thing. All right, so reopening the economy. I teased this. I promised I was going to talk about it. First, I think people should have had the right to choose whether to shut down their businesses or not. That's a discussion for another day. It's philosophical. Just my viewpoint on that. My real issue with reopening the economy is it's the lack of continuity and it's the lack of general preparedness of the huge reopenings. Georgia is essentially going willy-nilly. You have a little bit more structure in what's going on in Florida, but I mean, they're pretending that they're not going willy-nilly, but they're pretty much going willy-nilly. Texas, same thing. I mean, a lot of Texas didn't even close in the first place, and they're reopening. They're doing a county thing, so people are just driving across state line or county lines rather, and they're going to sit down and have a cup of coffee out on a patio, and then driving back to their county where they're not allowed to go anywhere. Allegedly, I don't know. It's very confusing. New York is sawing the state in half. They're basically taking the northern 80% of the state. They're reopening that. That's mostly political. They're trying to placate Republicans because almost all of the northern portion of the state is conservative leaning. And then Probably rightfully so. They're keeping New York City pretty much locked down, at least for the short term, and that's placating liberals or Democrats, because people have a tendency to want to feel safer with that mindset. I mean, I don't know how accurate that is. That's just the research that I've done regarding all this. California is super confusing. Um, they're not really going to lift stay-at-home orders allegedly until we have a vaccine. So I guess nobody gets to do anything until next year or whatever. That's kind of a while, so I guess we'll see how that whole plays out. Colorado created a new catchphrase this week. It's safer at home, instead of stay at home or shelter at home or whatever. It's safer at home. That's our tier one, go back to life as usual type of deal. It basically just means you should stay home, but you don't have to. But we never really technically had to in the first place. So that's not confusing at all. Governor Polis is bulled up on antibody testing, which is a great idea, except the only place you could get a antibody test was National Jewish Health as of last week. I guess we're supposed to get some more this week. But shockingly, it's basically impossible to get an appointment to get an antibody test. So I'm not sure exactly why he's wanting everybody to get antibody tests if you can't get the tests. Um, I don't know. I guess all I'm trying to say is if you really want to go out and manhandle some fruit or some vegetables at the grocery store with no masks or no gloves and itch your eyes after handing your credit card to the checkout guy, I mean, you can theoretically do that if you want. You want to go to a restaurant and sit down for dinner, you have to drive to Texas, right? It's very confusing right now. People are either going to be responsible or they're not. This is America. I mean, who you want to be is up to you. It would just be a little bit easier, I think, to determine what's fair and what's prudent if the county next door didn't have a completely different rule set, that only that there that those rules are, I guess, only kind of enforced, right? I haven't heard of a lot of people getting arrested for not doing what they're supposed to do. In any event, we just really appreciate you guys watching. It's a humbling experience that you all would take the time to watch and hear what my take is on the markets, and I really appreciate it. If you enjoyed this video, please like and subscribe so you won't have to miss any new posts. And until next week, happy hour, right? Cheers. Look forward to seeing you guys.